Let's talk to Mr. Mark Child. He is the CEO of Condor Gold. Mark, welcome to the show.
Pleasure to be here.
7 years in tenure as CEO. How does that feel?
A journey.
A journey. And which bit of the journey are you at?
Well, we started with nothing in Nicaragua, and we've taken that to 2.4 million ounces of gold, and we've now permitted that, which is fantastic.
Right. In terms of Nicaragua, political situation stable. What's the headlines there?
Oh, it's very stable. The ruling party there, the Sandinista Party, have reasserted control after some disturbances and troubles back in April to July. I've been back 5 times since April. Was there 2 weeks ago.
Okay.
Movement of people, trade, restaurants back. So there's a reassertion of government authority and things are stable.
Understood. Okay, in terms of the market cap, you've got a market cap circa £20 million, 52-week high 60p, 52-week low 20p. Shares are hovering around 30 pence. Yeah. Let's kick off. Anyone watching this for the first time, what is the key bit of Condor Gold?
Well, gold exploration company, so we've got 2.4 million ounces of gold in Nicaragua. It's very high grade at 4 grams, which gives us a break even of $700 an ounce compared to the gold price up today about $1,230 an ounce. We've got permits which took 2.5 years to do, so we can extract about 1/3 of what our resource is. That's all we've permitted, and we've now got a clear timeline through to production.
Understood. Okay, you had an RNS recently, according to my notes on the 28th of November, you announced an exploration update which extended known targets and discovered new high-grade vein systems at La India. Can you tell us a little more about that?
Yes, I think that's a 12-month exploration update. So we've got the permits, and the focus is that's for 600,000 ounces of gold production. So that's $750 million US. We've got the permits to extract $750 million of gold in 6 years. That RNS last week was a reminder that we're going for a major gold district of 5 million ounces. So we really want to double what we've got, and there's much more good news to come. And that is within the existing vein sets of 2.1 million, where we've got new discoveries along strike of those, and there are new areas that we've uncovered. And so it's really a 12-month sort of update to remind people this is a prolific gold district. We say we're drowning in targets, and we kind of mean that. We really have a challenge on where do we focus our exploration and what do we drill first.
Understood. So 2019, you've now got your permits. In terms of shareholders watching this interview, what sort of news flow would they expect to get next year?
Well, next year, by the end of next year, we should have the project construction ready. So we've got the permits, and we now need, under the terms of that, we've got to give the government a number of engineering designs for the processing plant, for the tailings, for the waste and layouts. We've got to finalise all those studies. So that's one part of what we'd like to do. The second part, and then after that we go into construction to construct the mine, and that's be $110 million capex to build the mine. In the meantime, what we would love to do is we'll demonstrate the prolific nature of this. We'll look at some bulk mining. We'll see if we can get some cash flow early. There are a couple of other mines in Nicaragua.
Right.
So we're permitted to extract 600,000 ounces. So why don't we try and take 2, 3, 4, 5% of that and actually take it to a nearby mine and see whether we can process it through somebody else's mine to get earlier cash flow. That would make sense. I would love to pull that off. I don't know if I can.
Right. Okay.
But that would give us a route to earlier cash flow than actually waiting through to construct the mine.
Understood. So in some of your recent presentations, you talked about these 3 feeder pits. Can you give me some headlines on that?
We've got 3 feeder pits, and the production out of those pits, which are within 1 to 3 kilometres of the new processing plant location, they're not yet permitted. They can produce another 200 to 250,000 ounces of gold between them, and that can actually give you another sort of 40,000 ounces of gold a year in addition to what we've got permits. So we will apply for additional permits for those satellite pits to make this all a bit bigger. In
terms of moving forwards, everyone says how much money is in the bank. Okay, what are your financing plans? Now you've got the permits, are you going to have to sort of go to the market, so to speak?
We will need to go to the market in the next 6 months. It's the nature of being an exploration development company. We don't have cash flow, and that, I think, is factored into the share price of where we are now. We can look at forward selling gold. So how do we finance it? We're looking at everything. All doors are open, so we can forward sell gold because we got the permits. We can say, look, I can get 600,000 ounces. Why don't I forward sell 5% or 10% of that? I.e., gold loan, gold streams. We can look at equity. We can look at debt with debt holidays. So we're working through that process at the moment.
Understood. Okay, so next 6 months, I'm a shareholder. We've sort of touched on that, what we're looking for 2019. Okay, I always ask people, I put my old hedge fund hat on, why should I consider having the shares in my portfolio? Can you give me 3 reasons, just sort of in summary?
Well, I've just bought some shares last week.
Right.
So as
Okay,
CEO,
well,
that's a good price to be setting. And so the directors bought 1.5% of the company's shares, myself and Jim Mellon, last week. That's rare to find buying existing stock. We think it's incredibly undervalued. The share, how do you value a gold exploration company? Well, one way is to take it as a percentage of the gold price. So we're valued at 1% of the gold price. So you can buy an ounce of gold for $1,230 an ounce, or you can buy us for $12 an ounce, roughly. So that's the ratio which we have. Now, at $12 an ounce in the ground, that would compare with Dalradian Resources, which was acquired on AIM a few months ago, and that's sold for $50 an ounce in the ground. So as a rough indication, we think, and that doesn't have permits. It might never get permits, it's in Northern Ireland, but it's now private and off the stock market. So there comes a point here where our relative valuation, we think, is a quarter of what it should be. We can say that as well on a price to book ratio. So we're permitted. We're only permitted for a third. We think we can get much more into the mine plan over the life of mine to make that longer and expand the production. And we're on a prolific gold district, and it's highly economic at $700 all-in sustaining cash cost, $700 an ounce break even. So it stacks up.
Understood. And finally, people say gold is old and Bitcoin's the new answer. Any last passing comments on that?
Well, Bitcoin, the store of value, down 80% this year. That one. Gold now gold's been a currency for 5,000 years and will continue to be for the next 5,000. There's a limited supply. We could argue we've hit peak gold. There's a strong correlation with the dollar. The dollar arguably has been very strong this year. Next year could be an easing on that, which would help. We've also had headwinds of higher US interest rates this year, and the gold price has actually held very nicely, and they're coming to near neutrality, if you listen to the Fed chairman. So gold could be one of the asset allocation calls for next year. So gold is there. It's a $7 trillion market. It's not going away. And the buying of gold by middle class, as people from China, India, and so on go in there, there'll still be a continued demand for gold, both as a safe haven and for people just wanting to using jewelry and other assets. So gold's there for the next 5,000 years.
On that note, Mark, we run out of time. On a personal note, can you send my finest regards to Jim Mellon?
Okay, certainly
Mark,
will do.
thank you very much indeed.